see a lot of traders out there trying to overcomplicate trading and try to make it seem as if it's the most complicated task in the world, trying to show you the most complicated tactic out there and have like 10 different confluences to enter a trade that works like once every year. So instead, I'll be showing you a very simple rule, the golden rule as I like to call it, and a rule that is probably the most popular amongst trading. I'll show you why it works and why you should always follow it. And this rule is go with the trend, and the trend is your friend. So what I usually do is always try to trade with the trend, and I will advise all beginner traders to do so. If you're a more advanced trader, you are going to probably have your own opinion about this and be a bit more experimental, try to trade against the trend, etc. But if you're a beginner, I will always trade with the trend. I personally in most occasions trade with the trend, and I'll show you exactly what I mean by that. So in order to help me out spot the trend, I have two moving averages. If you're not sure what a moving average is, I'll link a video to help you out and understand what moving averages are. And just to show you, so the blue one is the 50 moving average, so the short term, and the white one is the 200 moving average, so a long term one. I'm currently on the hourly time frame on the pound against the Swiss franc, and I'll be showing you how trading with a trend can help you be a better trader. So the rule that I have is if the 50 MA, so the blue line, is above the white line, so the long term, we are going to be taking long positions, and if the short term is below the long term moving average, we're going to be looking for short positions. So in this case, you can see that the blue line is above the white line, so this short term is above the long term. We are looking for long positions, and the rule and the simple strategy that I will be using for this video is not even a real strategy, it's just for demonstration purposes of how well trading with the trend goes. It's just whenever the price retraces back to the moving average of the 200, we are going to be taking a long position. So let's put that to test. So we see that here the blue line crosses above the long term, and we are going to be taking a long position every time it hits the white line. So we are going to be setting our first trade right here, and I'm going to be targeting very safe take profits. So I'm not going to be putting aggressive take profits. I'll be putting take profits that you are going to probably be taking. So my first trade is going to be off this first green candle and then targeting the previous high, and my stop loss will be around this area, so below the moving average and below the wick that we have here. And we got the trade with all 1.75 risk to reward ratio, which is great. Then price moves upwards, comes back down to the moving average and retraces back, and we have here another great trade. So entering after the green candle right here, you can see after it hits, we are entering another trade, and we are targeting the previous high, which was around this area. You can see this resistance zone being formed right here. So we are targeting the same area. You can see that we barely made it, but we got the trade. And I will have been setting my stop loss around the wicks, so slightly below the wicks. So a risk of 1.2, it's not the best, but it's still above 1, which is the limit for me. My trades, I usually put 1.5 to 2 risk to reward ratio, but as a beginner, I will advise you be around 1.5 and be comfortable with your trades. So we got another trade. Great, let's move on, and the next time it hits the moving average, you can see that the drop was very aggressive, but even if we got the trade, let's say here, we will have eventually made the our take profit. But instead, I will avoid this trade due to how aggressive the price drop and wait for a retest. So instead, I will have entered right here, and my take profit would have been the same as before, because it failed to make a new high, and I would be setting my stop loss again around the wick that we have here. So another trade that we've gotten, so you can see eventually price hit our take profit and we got another trade. And goes back up, you can see that if you use the 50 moving average, you could still have gotten some great trades. So afterwards, it retraced from the 50 and pushed upwards. So you can see that even for the 50, this still works. But my preferred way of going about this is having a deeper retracement. So the next time that it hits the 200, it's around this area, and I'm entering after the green candle. So setting my stop loss to be close to that, and then targeting the previous highs. So let's say about this area right here, so you can see on the left hand side, and then eventually it hits my take profit. And afterwards, the next time that it hits the moving average, it didn't have a green candle, so there will have been no trade for me, and we just got 4 trades out of 4 just by trading the moving average without even having any indicators on other than the moving average. So simple as that, we got 4 trades profitable, and that is like 4% if you were trading 1% each time. So you can see how great this is on trading with the trend, and this was a bullish example. I'll be showing you a bearish example right now. So in this example, we're in the same chart and we are in a downtrend. As you can see, the 50 moving average is below the 200, and we are going to be using the same method of placing our trades. So instead, we're going short position, and whenever it touches the moving average and we got a bull candle, a bear candle, sorry, we're going to be placing our trades. So the first one that we got here is this one. So setting my take profit around the previous low, and then setting my stop loss around the previous high. So the previous high was this one right here. So the previous time that it retraced was here. So I'll place that slightly above that, and we got this trade. As you can see, eventually it hit our stop loss, our take profit, sorry, and you can see that this one was not as smooth as the other one. So you can see that it eventually it retraced a second time before moving downwards. So you need to be careful of these, because when trends usually do this, you need to be a bit more careful when setting stop losses. So if you see, let's say you're trading this pair and you see that the price is spiking out of the moving average, you need to be more cautious when setting stop losses, because you might be get wicked out due to spiking prices. So be aware of that. So the next time that we got a retracement was around this area. So first time we see a red candle, so this one should be our entry, and I will be setting my stop loss around the previous high. So you can see this area right here was kind of respected before on here and on here. So I will be setting slightly above that, and I will be setting my take profit to this low right here, and I eventually got the trade here. So you can see that we got 2 trades again, but you can see that the price stayed in this area for a while and tried to test the moving average for a long time, but failed to break through. So it eventually went down, but this took like almost 1 or 2 days to break down and go below. So you'll have been in this trade for a while, and I know that you probably will have gotten out if you're a beginner, because you will have thought, okay, we are seeing price move up and down. You get worried. So I know, don't get worried and just leave your stop loss and take profit the same. And if it hits a stop loss, it's okay. If it doesn't and takes the take profit, great. Anyway, so the next time that we get a retracement, you'll see this aggressiveness. You can see it wicks out of the moving average and then drops below, and this will have been an alarming sign for me to avoid this trade. But let's say that we got the trade after the red candle right here below the moving average, and set our stop loss to above this wick right here, which is here, you can see, and take profit would be about the same. So I will leave that as that, maybe slightly higher, and then you can see the price went back up, wicked on the same level as before, and then pushed down to eventually hit our take profit. You can see that price retraced a couple times back up and tried to test the moving average but failed, hit our take profit, and then we got another test. You can see another wick right here, And let's say the first bear candle that we have here, I'll have been entering on here, got the wrong tool. So entering here, short position, setting our stop loss above the previous week we have here, and setting our take profit on the previous low, and we got another trade. You can see that it didn't retrace back to this area again after this aggressive week. If we got this trade as well, let's say we got this one right here, again got the wrong tool. So take another position here, short, set the previous our stop loss to the previous week right here, on the previous take profit on the previous low, and we got another trade. And afterwards we didn't get a red candle here below the moving average, so we wouldn't got any trade. So in here we got 1 2 3 4 5 trades, and you can see how it went through my head and how I set my stop losses carefully and got great trades out of this trend. So here is my advice: always trade with the trend and you'll be on a good start to making money. Anyway, thank you for watching. If you enjoyed this video, please make sure to like and subscribe on the channel. If you have any questions, please comment below. If you have any recommendations for a video that you want to see, again, comment below. And thank you for watching and have a great rest of your day. Goodbye.